Hi Trader, Tina here once again from ShortMeTina.com with my daily recap. I hope you had a great and awesome weekend. Today is Monday, the beginning of the work week, and well, we're here, and so we're just going to continue moving on. But before we get into our usual recap of the overall markets, I'd like to welcome you. So if this is your very first time tuning into a ShortMeTina video, I'd like to say, well, welcome. Do me a solid, hit that thumbs up button, hit that subscribe button, and do me a solid, drop us a comment in the comment section. If you're returning, I want to say welcome back. Also, hit that subscribe and like button and drop a comment in the comment section. Let me know how you're feeling and tell me if you did anything exciting for the weekend, or just where do you think the market is going, or what do you think about the market, right? Because that's what we do here. We talk about stocks. Anyway, on your screen right now is the SPY S&P 500 daily chart dating back to 2018. I generally go a little further back to 2017, about 2 years worth of data. Strong close today, right? We closed at 307.37 today. Once again, we made all-time highs in the SPY, going as high as 308. So essentially, since powering through this 293, 295 once resistance level right here, right here, now support, the market has really been trending up for the past month or so. Anyway, Fed just issued rate cuts last week, and these 2 hours essentially were the times after the Fed issued cuts, right? So I believe the first cut in 2019 came around July. After that, the market experienced about 4 weeks of decline. You can see it right here. Then we had that run up into the second rate cut. I think that happened sometime in September. Then you had another few weeks or trading days of decline. And so this question mark, I placed it right after the Fed's issued rate cuts last week. I believe it was Wednesday. I said, well, the last 2 times we had a cut, the market pulled back. Will this happen again? Question mark. And I changed my arrow because for the last 2 days, or 3 days, the market has been trending up. So it seems as though this third time around, we're actually bucking a trend. So sitting here at 307.37, if we continue to trend higher, you're asking yourself, Tina, where do you see the resistance coming in? Well, I'll talk about that tomorrow. So anyway, that's my take on the SPY right now. After cuts, as opposed to pulling back like we did the first 2 times, it seems as though the market actually wants higher. And with a new all-time high today of 308, it's on its way. So anyway, I'll discuss tomorrow what I believe would be our next target with the SPY before it runs into any sort of real resistance. What else? All right, so unlike the SPY, the IWM, which right now on your screen is the IWM daily chart dating back to 2017, resistance is a little quote-unquote clearer than it is with the SPY, right? So for a very long time, I've talked about that huge psychological wall or resistance level of 160, right? Question mark, is that the next stop? I've had that question mark for the past few trading days. Anyway, we closed at 158.93, going as high as 159.70, essentially getting right at that 160 level, or just like razor thin right below it before pulling back. So heading into tomorrow, you're going to ask yourself, or this week, will the IWM power through, get above 160 and continue trending up, making new all-time highs, or at least retesting all-time highs like we saw with the SPY a few weeks ago? Or will history repeat itself or rhyme and we see the markets pull back? So again, went as high as 159.70 today. The low was clocked in at 158.47. We closed at 158.93. So it can go either which way, right? We can start to pull back tomorrow, or we can power through. Anyway, so I say that to say resistance is a bit more evident with the IWM as opposed to the SPY. I'll tell you right now, we should run into some sort of trouble or selling when we get to the 160 mark with the IWM. What else? All right, and then we have McDonald's off about 2.7%. I see a close here of 1 88.66, you had that bit of a gap down. The low clocked in today at 187.55, all on the fact that their CEO, and I don't know him by name, is out due to relations with an employee. Apparently, that goes against McDonald's policy. And so you can see here, stock is off about 2.72% on huge volume to close at 188.66. Come on, guys. Come on. McDonald's is a pretty good stock. It's definitely a stock you need to have in your retirement account and portfolio. Obviously, a trade is coming underway, but even if you want to buy McDonald's right now and stick it in a long-term investment account, it makes perfect sense. So the stock loses about north of 3% just because the CEO is out. They already ushered someone new in. Anyway, clearly always an overreaction by the market. It may pull back some more heading into tomorrow or the remainder of this week, but you'd be silly not to want to own McDonald's. It might be a little bit too rich for some up here at 188.66. Again, if you're trading it, you might want to wait until it comes back down a little bit more. But if you're looking to buy it for a longer term investment, I think jumping in here makes perfect sense. From its high of around 220 or 223, stock is probably off closer to 20%, like 13 or 14%, somewhere around there. So anyway, I say all that to say McDonald's, I see it as a buying opportunity. What else? All right, so let's wrap it up and round it out with ticker AGRX daily chart. Let's just focus in on price action the last five trading days. Huge roller coaster ride for anyone that is in ticker AGRX. However, if you were able to buy during this 2-day sell-off and pull back where the stock dipped as low as 35 cents, you've enjoyed nice returns and nice gain because the stock is up about over 300% in that time frame, putting up an additional 31% today to close at 178. Some after hours activities up an additional 6.74%. I see a quote of 190. So essentially in after hours, we are a penny above today's high. Now, if that sort of price action continues into trading tomorrow, I can potentially see the stock running once more. So the key is it should open up above 178, take out today's high of 189. And if you can do that, I can see it running to around $2.20, $2.30 before running into any real resistance. So that's my take. If you jump in now, there's a potential 50 cents or more of upside before things get a little bit shaky. But for that to happen again, we need to open up positive. So we need to open up at minimum for me above that closing price of 178. If we take out today's high of 190, all the better. All right. So that's my take on ticker AGRX. So we're going to cap it there. Tina here, once again from ShortMeTina.com. If you enjoyed any portion of this video, I'd like for you to do 3 things for me. 1, comment in the comment section. Let me know. What are your thoughts on my analysis? That's the first thing. 2, I do videos daily, so ensure to head on over to our YouTube channel, ShortMeTina, and hit that subscribe button. Turn on that notification bell. That way you won't miss any videos. And lastly, I've been trading for well over 15 years, closer to 20. That's 2 decades. So if you think you can learn anything from me, then definitely head on over to our website, ShortMeTina.com. Sign up, become a member. Thank you for listening.